Hi everybody, this is Boris Schlossberg from NYMEX, and the biggest story in the currency market today is the dollar-yen pair, the relentless rise in the dollar as it continues to move higher off of U.S. Treasury yields that are now above 3%. And the reason why the U.S. yields are above 3% is because the market is starting to feel first inklings of inflationary pressures in the U.S. economy. Now, today's PPI data was inconclusive, but tomorrow's consumer price index could be a very key point in pushing the inflation story higher. Regardless of how the number comes out, it's pretty clear at this point that inflation is running above the 2% Fed target, which means the Fed is very much on target to continue raising rates. Adding to the whole issue of why yields are rising is the fact that U.S. deficit is increasing tremendously, and there's a massive supply of treasuries coming into the market. That supply is creating higher yields as there are far fewer buyers now for U.S. treasuries. All of that is creating a virtuous cycle for the U.S. dollar, which is the only currency in the G7 universe that sees a central bank that is raising rates. Everywhere else, growth is relatively slow and in fact slowing, and none of the central banks are in any kind of a mood to raise rates in the near term. So given the fact that we have relatively steady growth, lots of supply which is pushing yields higher, and the fact that the Fed remains very much committed to its tightening policy, it looks like all systems go for further rally to the dollar. And dollar-yen on the spot basis looks very much likely to break through that 110 key barrier level, which would be about 90 cents on the futures basis. That's the biggest story in the currency market today. This is Boris Schlossberg from NYMEX.